Hi everyone, welcome to Fintech Summer Sessions 23, week 10. We are now in the final week of the Fintech Summer Sessions and really pleased to see so many of you here with us. Thank you for sticking with us over the 10 weeks and thank you for allowing us to change the time to Wednesday. Yesterday, of course, we had Seamless and the day before we had Seamless. And thank you to so many of you which did come to Seamless, come and said hi to us. Really appreciate it and really appreciate your support at Seamless. Today, I'm really excited because we've got what we're talking about, one of the hottest topics of the year, which is artificial intelligence in financial services. And we're talking to one of my favorite fintechs in the kingdom, Jared Baker from Mozen. Mozen, if you don't know, they actually use artificial intelligence in their solutions. So Jared can actually talk about practical use cases here of artificial intelligence in financial services. So as ever, please do add any Q&A you have in the chat. We'll go through as many as we can. But for now, I'd like to hand it over to Jared. Jared, thank you for being with us. Thank you for giving your time. And the floor is yours.
Thank you for that kind introduction. And good evening, everybody. Thank you first all from my side for joining the session. I'm really excited to talk a little bit about my world, which is artificial intelligence. First off, just a little bit of background, if I may, for myself. I'm Director of Data Science at Mozen Systems, which is a leading fintech within the Gulf region. I've been working with algorithms and data over the past 30 years in the insurance, banking, and credit risk industries across Africa, Middle East, Europe, and even recently in Asia Pacific as well. And really today, I would like to impart some useful insights on artificial intelligence within the sector and specifically its place and where we are within the Kingdom of Saudi Arabia. And that is basically the beginning. And hopefully we will start with the first one, a bit of history on what is artificial intelligence. Now, I think the key thing here is that artificial intelligence has been around for far longer than what most people think. In fact, in the 9th century, a Persian mathematician, Abdullah Muhammad bin Musa, was also known as the father of algebra, coins the term algorithm. So it's really been around for thousands of years, basically. And what is an algorithm? An algorithm is a process or a set of rules to solve a problem. So it's really just a recipe that we apply to basically solve a particular problem that we have. In the digital era, algorithms are used by computing systems to solve complex human problems. So this could really be anything from a self-driving car made by Tesla, or to basically getting a loan approved or buying something online. Behind each of those processes sits multiple algorithms that makes decisions and will eventually decide, what the system has to do. From that point in time, a long period transpires, almost 1,000 years before we really developed the technology to really build algorithms. And I think one of the key next leaps forward occurs in 1940, where a gentleman by the name of Alan Turing creates an algorithm using a mechanical computer. And he uses this to break encoded messages from Germany. Specifically, they were using this Enigma encoding system. And this algorithm is able to break these messages within minutes. And this allows England basically to obviously scramble fighters to obviously defend the country. Now, without this algorithm, it would take a person or a team of people hundreds of years to break the message. So algorithms really sort of start to show their true color and capability during World War II. The next big milestone is in 1947 when the transistor is invented. Now, the transistor is basically an electronic circuit that is used within logic units, and that makes up really what computers are today. Without this key invention, we would not have computers and we would not have the ability to execute complex algorithms on computers. Today, more than 20 million transistors are produced every second. Within your laptop or your computer or your iPhone, you've got a CPU and a GPU, and within these computer chips, there's literally billions of transistors. So transistors really also helps us to develop what's called economical digital computers. And this is really where the true AI revolution is launched. 11 years later, in 1958. And this is really where it moves now more into the financial services industry. A company called Fan Isaacs or FICO creates a credit application scoring algorithm. So this is basically a formula-based risk assessment method that is used by most lenders to determine the probability of default. And by probability of default, I mean simply is that if a bank provides a loan to an applicant, the bank needs to assess at that point whether the applicant has got the financial means to repay that loan or not. And that is obviously key to the lending decision. The credit scoring algorithm is really the key to that whole process. It will take a long time before this approach becomes mainstream, but today you cannot obtain, in most countries, you cannot obtain credit without a good credit score. In 1982, John Hopfield proves that an artificial neural network can learn and process information. Now, this is the next big leap ahead in artificial intelligence. A neural network is basically a cutting-edge algorithm that simulates human intellect. And this is really the first time where we try to create human-like intelligence with a machine. And this can already be traced back in 1982. So the technology or neural networks is something that's also been around for quite some time. But at that point in time, there were a couple of blockers where it couldn't really develop to its full potential that we see today. The first blocker was basically processing power. And if anybody are gamers within the audience, then you know that within your gaming laptop, you will have something called a GPU. GPU are very good at calculating or making high-speed mathematical calculations. And GPUs also unlock AI or true AI for us. And it makes basically what we call deep learning, which is a subset of neural networks possible. And from this point onwards, over the next 12 years, we see huge leaps in the sophistication of AI. And this is where we are basically today, is in 2022, a company called OpenAI makes two systems available. One is called ChatGPT, and the other one is called DALL-E. Now, these are basically called generative pre-trained transformers, and that's just the sort of the technical term of the type of neural network that is being used here. But these type of AI systems, apart from being sort of the first ones to really become publicly known, is unique in that they can interpret language and they can actually generate content as well. And this is really a huge leap in the complexity or the capability of AIs. And this will obviously shape our future. And we will see, obviously, this changing the way that we conduct business, the way that we work. This will have a huge impact. And now I will basically move on to the next slide. So a bit of history. Also, the next slide deals more with really what is artificial intelligence and what is not. I'm using the European Commission definition because it's quite a broad and wide definition, and I believe that it covers really all aspects of AI, which is quite broad in itself. And the definition basically states that it's any machine-based system that is designed to operate with varying levels of autonomy that can generate outputs such as predictions, recommendations, or decisions that influence the physical and virtual environments. And there's a couple of important terms here. The first one is operate with varying levels of autonomy. This means that we have machines that make decisions. Sometimes we are part of that decision-making process. For instance, when a loan application happens, there will be a credit score, and we will look at that credit score, and then the loan officer will decide to make the loan application or not. So there is human interaction that takes place. But sometimes it operates in the background. So how the actual credit scoring algorithm works, there's no human intervention there. There's a full autonomy. Even with a self-driving car, at this point in time, the technology is not there yet, where there is no full autonomy. So there's partial autonomy, but we will obviously get to a point where full autonomy, even with self-driving cars, become a reality. So that's the first important aspect, is that there is some level of autonomy. The second important aspect is that it will generate predictions, recommendations, or make decisions that influence our virtual and physical environments. This means that AI has impact on our actual livelihood, whether it is physical or virtual. So whether you apply for a loan or whether you drive a self-driving car or have a self-driving car, that AI will impact on your life. And that is really where the key comes in that there also needs to be regulation to ensure that artificial intelligence is developed in a constructive way. So, and regulation and within the kingdom as well, it's becoming a key focus area. But we are seeing that globally, that regulation is really focusing on two aspects. Number one is basically to ensure better conditions for the development of this technology. And then secondly, to make sure that it's done in an ethical way. Within financial services, AI can create many benefits, including improved operations and reduced costs. So it makes banks and lending organizations more efficient. It can also enhance fraud detection. And this is a big problem that most financial organizations sit with, in that there are bad actors, and those bad actors are basically, obviously, creating financial crime to steal money. AI is very good at detecting these mechanisms. It also reduces risk for the bank, and I'll show a lot of my presentations of coming slide is about bank risk and how AI is used to quantify risk, but it also helps with faster decisions and better customer experiences. And here, for instance, a good example is that with AI, the loan origination or the loan application process becomes very streamlined, and it's a couple of clicks and you get your loan, and you can go buy a car or you can buy a laptop, etc. Historically, when you applied for a loan, typically this process was long. You had to go and see your bank manager. So the whole idea also with AI is that it makes decisions faster, but it also improves our customer experience, or the bank's customer experience, and you applying for a loan, your experience in applying for that loan. The following slide. Now I go into a little bit more detail exactly about the different branches within artificial intelligence. As per the first definition that I shared, is that the overall big block here is that artificial intelligence is the ability of a system to emulate human intelligence. So to automate, speed up, or improve tasks that a human typically would have done. Then there's two subsets under artificial intelligence, and this is where things get a little bit more interesting. The first subset is called machine learning. And this is basically where we use a machine to find a solution to a problem where we as humans fail. So we don't have the mathematical ability, or we don't have the time, we don't have the ability to interpret the data in a correct fashion. And this is really where machine learning has been used since that first slide where I went through the key highlights, the FICO algorithms. This is typical machine learning algorithms, and they've been around for 65 years already in financial services. And typically by name, there's something called a regression model, which is just a statistical model, and then there's something called a decision trees. And I'll show a little bit later on the presentation how these machine learning models typically work. So this is where we are at the moment. And then the next step is really the most sophisticated part. And this is where OpenAI and ChatGPT and those things live. Deep learning, which is basically a subset of machine learning that stimulates human logic and learning by using very complex algorithms like artificial neural networks. And this is really where the future is that we will start using deep learning to solve more complex human problems. And that will also feed back into the financial services sector. And specifically here, we look at things like language. We are now on sort of the point in time where computer systems can understand language and generate language content, but also image processing and image creation. These are really the aspects of the deep learning. But the problems are, obviously, it's not all good news. There are a couple of complications here, or a couple of blockers. Solving complex problems with AI require money, time, expertise, and data. So typically the process is lengthy and expensive one. So it takes really a long time to train AI, and typically millions and maybe even sometimes hundreds of millions of dollars to train AI like Open or ChatGPT. But the advantage of these systems is, like, unlike humans, AI learnings are transferable and scalable. And what I mean by that is that if I have to go and learn a new language, it will take me also obviously a long time and a lot of effort. But unlike an AI, I can't take my knowledge of a new language and impart that onto somebody else. That same person, that or next person that needs to learn that language has to go through the same processes that I just went through. AI differs here is that once we've trained the AI, we can deploy it on any computer. So that's what I mean, that it's transferable and scalable. And this is one of the key advantages, in that now OpenAI was able to learn, teach and train ChatGPT, but now anybody can access that technology. And that is one of the other advantages, in that we've got transferability and scalability. Coming back to the region in itself, under the 2030 vision of the Kingdom of Saudi Arabia, AI has been identified as a key topic to first off to be developed and integrated into the new megacity NEOM. But the second part is that there is a reform plan, and that is really a package of economic and social policies that is designed to remove the kingdom's dependence on oil. And AI will definitely play a leading part in this transition. The AI revolution is only starting now, and the way that it will affect our lives, hopefully to the better. We still need to really see the true benefits. We're only starting to see the benefits. Now I'm going to get a little bit more technical and specifically talk about classification problems. Now, a classification problem is typically, and I'm going to go back to the example of a loan application. A loan application, the loan officer evaluates that application, and then he has to make a decision: is this person going to repay the loan, or are they not? And that's what a classifier does. It makes the same decision. So it's really an algorithm that decides or aims to classify a data set into two or more distinct classes. So, and the data set here will be basically a data set of loan applications. And it will basically use some sort of a formula-based method to decide whether each application that it's in the data set is likely to be a good payer or potentially default. So most of the classifiers are binary in nature, which means that it's got one or two outcomes. There are, however, some exceptions to the binary nature, but within financial services, it's usually this classification problem. Is this application fraudulent, or is this application good? Will this person repay the loan, or will they not? So this is one of the key areas where classifiers are used. Classifiers learn from past data. And this is really the key again, is that it's not intuition, it's nothing else. All the system or the algorithm or the AI does, it detects the contribution of different attributes to an outcome. And by a loan application, I would mean it would be the age of the applicant, his income, potentially where he's working, does he have any other loans, etc. So something that is relatable to the problem at hand. And this is really, so for instance, if I have a good job, I earn a good salary, and I've repaid my previous loans, then it's highly unlikely that I will default on this loan. And this is really what the AI does. It looks at the attributes, and it looks at the outcome. So it goes through a training process, and it eventually optimizes or comes with a solution, an optimal solution, which attributes are important and in what weights. And this is how most credit risk scorecards will work. Even fraud detection models work on a similar basis. Then we also get classification or learners that learn without labels. So that here, in this example, for instance, we know that there was a loan, or the training data, it attributes about the loan, and then also an outcome about the loan, so that this person repays loan on time or not. Labels, when there's no labels available, then there's also AIs that can actually learn. And this type of learning is called unsupervised learning. And unsupervised because we don't know what the outcome is. So to some extent, we lose, on these type of learnings, we can understand fully what the AI is doing. On these ones, we lose some interpretability on what the AI is doing. I'm going to go through a couple of sort of systems or rule-based systems within specifically financial services and how decisions are made. But before I start with the actual classifiers or the AI part, I will start with what's called a rule-based system. So this is an expert-based system that was used historically before we had AI. We've basically got a problem. We've got an application. We don't know if this application is valid or if it's a fraudulent application. And what we do as humans is we've got experience. So we create certain rules that will point to a fraudulent application. For instance, there's something strange on the application form, or alternatively, maybe some details are linked to maybe a previous fraudulent case. And typically, these two rules deal with that. So in this case, the rule-based system determines that the application here is fraudulent and it will get rejected. If not, then it gets approved. There could be a third rule, for instance, where we don't really have sufficient information to make a decision either way. So basically here we're uncertain, and then this rule will trigger potentially a follow-up process where some additional information will be required from the loan applicant, or some internal investigation needs to happen. Most credit applications without AI systems are based on some sort of a rule-based system. The problem with rule-based system is that it requires expert knowledge. And typically with expert knowledge is that we can potentially have some biases, and biases will result in wrong decisions. So it's a good system, but it's not perfect. And therefore, we basically turn to AI or algorithms. And one of the key classifiers, and I mentioned the word regression before, and for people who have studied statistics, regression is one of the things that you cover during your statistics course. Logistic regression is the most common used classification algorithm in banking and finance. The advantage of this regression approach is that it's understandable and interpretable. That means that the model will create the optimal scorecard for us, but we understand the reasons behind the scorecard, and we can interpret it. And that's also one of the main reasons why it is so widely used. I think one of the key things you will see during this presentation is that AI does not operate in a vacuum. It operates next to human beings, and there will always have to be oversight when it comes to AI. And this is one of the main reasons why this type of approach is used quite common. In this case, we've got a bunch of loan applications. The green ones are valid applications, and the red ones are fraudulent applications. The system basically learns the patterns, and here we can see there's a clear division. On the left-hand side, we see green, and on the right-hand side, we see red. And this is so this feature, or this attribute or aspect, is called the data is linearly divisible. We can easily draw a line between the reds and the greens. It's not always 100% successful, but in most cases it's successful. So in this case, the algorithm will find this optimal point, and the application here is actually seen to be on the left side of the line. So this application is legitimate. So in this case, the model or the AI interprets the data and makes a decision that the loan is a valid loan, and that the process goes ahead. The problem with the previous approach is that the world is not black and white. It's not always linearly divisible, and henceforth there's decision trees, and I'll explain to you now how it works. But these type of algorithms are a little bit more complex. They can be used again for classification problems, so they determine whether an application is valid or fraudulent. They tend to perform better than regression models because they basically can evaluate a combination of features together, but there's also some issues to them. So in this case, or this example, again, we've got an application here, and we've got to decide, or the system has to decide whether this application is fraudulent or if it's a legitimate. And here we can see basically there's a node, and at that node, it will look at a certain data point, and then a branch or a tree, and that's why it's called a tree. A branch is created for each of the two alternatives. So for instance, if it goes down this branch, basically a second decision is made here based on another data point or combination of data points, and then eventually the system decides that this loan is either a valid loan or it's a fraudulent loan. In this case, we're actually going down this part, and here you can see there's again a tree branch. And in this case, basically, our data points to a fraudulent application. And I marked this one particular, or specifically fraudulent, whereas in the previous example, the application was legitimate. These AIs are not 100% accurate. They are better than expert systems, the rule-based systems that I showed in the first graph, but they still misclassify certain applications. So, and in some cases, you could get an application that is basically approved by one system but rejected by another system. So there's obviously steps that we need to take during the development of these algorithms to ensure that our models are performant and that they're stable and that they do not suffer from something called overfitting. And overfitting is a big problem in AI models, in that it means that the model cannot generalize. So when you basically produce the model in your lab, it seems to be working very well, but once you basically deploy this in real world conditions, then the model starts making misclassification mistakes. There are obviously mechanisms and methods that we employ during the model development process to ensure that our models are not overfitted. And in the end, when you build different models with different methodologies, you assess the performance, and typically what you will do is you'll choose the best performing model, because that model will basically make the best decisions, and hence making the best lending decisions will maximize the profits for the lender. Decision trees are starting to gain definitely acceptance in financial industry. They are slightly more difficult to explain and interpret to the regression models, but the upside is that their performance is better. And hence we do see a slow transition from regression models into decision trees. When I was also going through the AI, the different aspects to AI, I mentioned something called unsupervised learning. Unsupervised learning is basically where we don't have any outcome data. So we've got a bunch of transactions or bunch of loan applications, but we don't know if these loan applications defaulted or not. What the algorithm does here is it basically learns by segmentation. So in segmentation is the group of the act of grouping population into subcategories based on similarities. So in this example, again, we've got an application, and then our algorithm creates 4 distinct groups. A human is still needed to interpret the results. And in this case, the human comes in and sort of realizes that these loans really looks like high risk loans, so potentially fraudulent. These ones, it's difficult to assess, so potentially you need more investigation. You need more information to make assessment. And then these 2 groups look like legitimate loans. So unsupervised learning is used a lot when we don't have outcome data to build our models, but we still want to have some sort of algorithmic approach to optimize the process. The segmentation model works by looking at the application and then seeing to which group it's closest. And in this case, we can see that our application is here closest to a group that we believe is fraudulent. And then in this particular example, the system will mark the application as fraudulent. Then on to the final one, which is neural networks. So it's again going back to ChatGPT and OpenAI. These are basically, as I said, simulate human logic. We've basically got the same problem. We've got an application, and our system needs to decide on what is the application legitimate or not. Like a regression model or your decision trees or even the unsupervised clustering models, we've got input, so certain attributes that's available at the application point. And then the magic happens here in the middle, and this is what we call hidden layers. So there are typical multiple hidden layers, and here we lose some level of interpretability in that the network creates some interesting patterns through looking at the data, and eventually comes up with a solution output. The main advantage of this ability is, so in this case, for instance, the neural network infers that the application that we had is fraudulent. But the big advantages of neural networks over the other approaches that I showed before is that it can deal with something called high dimensional data and nonlinear data. which means something like language. So in language, we've got sentences and we've got words and we've got letters. And typically in a book, we've got thousands of words. So that is what's high dimensional data, data that's got basically thousands of input variables. The same with image data. And specifically, we see that neural networks are being deployed specifically within language processing and image processing. These systems are also fault tolerant, which means that if we lose some of our input fields, the system is still capable of actually giving good output. The disadvantages of these neural networks is that they are difficult to interpret. We can explain them, so we can understand why we're coming to a decision, but we can't interpret or understand how the system got to that decision. So we lose interpretability. And then the biggest disadvantage is that they are computationally expensive, which means we need a lot of processing power and a lot of data to train these networks. A good example is OpenAI. I think ChatGPT, they trained it for 3 years on terabytes and terabytes of data before they were able to deploy ChatGPT. So neural networks are the most complex solutions, but they are difficult and expensive to train. And now on to a couple of use cases. Oh, sorry about that. I just jumped the slide. I just want to check that my time is still good. Yeah, we're still good for time. So just there's two specific areas within financial services where AI is being used actively. The first one, I've already touched a little bit on the credit risk assessment with biased credit scores, but the other one is in fraud detection. And we see that it's starting to the financial services that definitely leading the rest of the sectors when it comes to using AI. In the EU, 58% of banks rely heavily on AI for fraud detection. And we can see globally only 20% of companies use AI in fraud detection. And as fraudsters become more sophisticated, as technologies like ChatGPT can also be used for evil, unfortunately. And as these technologies become more available, we will see that we have to really increase our detection of fraud activities. And the problem is here, bad actors are becoming more sophisticated. And therefore, we need to make the solutions more sophisticated. Now, the type of things that fraudsters use are typically called malware, viruses, worms, generative AI, so like, for instance, ChatGPT, to produce fraudulent content. To do so, help them with social engineering mechanisms, help them with phishing and spear phishing content. So really, these guys are basically always looking for weaknesses within people or within systems to exploit that. And then, unfortunately, we can also use AI to discover AI. Yes, we can actually get an AI to discover some sort of a automated system. And therefore, once we discover and understand how that system works, we can then look for weak points or exploits on how to beat the system. So it's a race. It's like an arms race. And we need to stay ahead of the bad actors to make sure that fraud and financial crimes are under control. How do we improve our fraud detection rates? Number one is, first off, we need to look at advanced machine learning techniques. So again, transitioning into more decision trees and also supplementing some of our models with some neural networks. And in this case, image processing when it comes to ID verification, etc. Even language processing can be used in fraud to understand the context of conversations, etc. So advanced techniques, and then also diverse data sets. So this is very important in that we are living in a world where data is the new oil, and we've got this huge resource which is called data. And by getting diverse data on this particular subject, we increase the performance of our fraud models. So there's two aspects that we need to do here. So the one is obviously getting more advanced models, and secondly, using different data sets. The second aspect is really critical to the entire fraud detection system, and this is called case management. And this is really where there's suspected fraud cases. These need to be investigated, and the outcomes need to be reported. Once we can report the outcomes, that provides a feedback loop to the models, and the models can improve and learn new patterns. So case management allows for supervised learning models And this allows us to get true positives. So when the system identifies a transaction or application is potentially fraudulent, when we investigate, we find that's the case, and less false positives. So where there is potentially a risk signal is generated, a false positive means that when it is investigated, it's actually found that it was a legitimate transaction or application. So case management is also critical. And with these two tools in our toolbox, we will be able to fight financial crime. Also, at a regulatory side or a national side, it's crucial for fraud data to be shared at sector or national level. This could be either done voluntarily or regulated, and this is typically called the National Fraud Prevention System. And I know this is one of the initiatives that's also being looked at for the kingdom. The advantage here is that this type of solution uses multiple data sets that covers the entire financial population, and this will generate the best fraud detection signals. So that's the first part of AI in financial services. The second part I did touch on a little bit earlier on, which is credit risk assessment. I'm going to go into a little bit more detail. I'm just going to check the time again. Number one is that credit risk assessment, or AI and credit risk assessment, has been around for 65 years. And that first slide that I showed, the company FICO, they developed the first credit scoring algorithm in 1957. Now, the interesting thing is that it would take another 32 years before it goes mainstream. And it goes mainstream because in 1989, FICO takes that algorithm, and the output of the algorithm, that is basically a probability of default, which is really a technical term, and you can't really sell that effectively. They convert that probability default into something called a credit score. And the credit score goes from 0 to 1,000. And a credit score of 1,000 means that you are there's almost no likelihood that you will default on your loan. And a credit score of 0 obviously infers that there is a high likelihood of default. So suddenly people can relate to a credit score. They couldn't relate to the probability of default from the algorithm before. So in 1989, FICO launches a credit score based on their algorithm that is 32 years old. And by 1995, it becomes the standard within America. So one of the mortgage guarantee companies, Freddie Mac, in 1995, they require all lenders on loan applications to have a credit score done, and specifically the FICO credit score. So when AI, to unlock the true value of AI, also not just only requires the technical solution, but also stakeholder engagement. So it has to appeal to basically the broad public to be adopted. And in this case, the mechanism to do that was basically the credit score. Within the Kingdom of Saudi Arabia, we find two credit bureaus that use credit scores, and that is SEMA and SEMA Saudi Credit Bureau and Bayan. So within Saudi Arabia, credit scores are already well embedded within consumer as well as business risk. The second thing about credit risk assessment is that it's governed by guidelines, and specifically within Saudi Arabia. SAMA regulates lending in the kingdom and ensures stability and growth in the sector. It also encourages investment, and because investment stability within this sector will contribute to financial stability within the country. SAMA's aim is basically to aim for a harmonized approach to risk assessment and reporting. That means basically that all lenders and all banks must follow roughly the same process when assessing risk. And obviously, the advantages to this is easy to see in that by standardizing this, we know that certain banks don't follow some different approach, so we can have sort of confidence in the risk measures or the risk guidelines or the risk assessment guidelines that banks use. And what we find globally is that most lenders basically adopt these guidelines as best practices. And where they have not implemented data-driven approaches, so AI really to help with credit scores and credit risk assessment, fraud risk assessment, they are basically moving to data-driven approaches. So few still use expert assessments for credit assessment. So apart from basically sort of creating a healthy lending environment, it also enhances comprehensive risk reporting. So by having this system and these data-driven models in place, bolsters credit risk assessment and reporting, and this helps central banks manage systemic risk. And I'm going to use a very good example here of a lot of reform happened after the 2008 financial crisis, specifically because, and what happened there is that a sort of medium-sized bank in America failed, and this caused the entire financial system basically to come to a standstill for a couple of weeks. And basically, a financial fallout lasted 5 years after the fact. And this was purely because the banks did not have the mechanism to understand risk of the underlying, the central banks didn't have the mechanism to understand the underlying risk of banks. And hence, when something small happened, they could not control it, and they could not even see the fallout potentially. A lot of things have been done since then, specifically related to risk reporting. And now, in recent years, we've seen a coronavirus pandemic, as well as an inflation shock and a war in Ukraine that's also had some disruptive impacts on the global economy. We've seen all of these things happen, and the system becoming far more resilient. So there are definitely still some worrying signs from a risk perspective, but we've not seen anything close to 2008 reporting. And I think, my opinion is that this has a lot to do with the systems that have been deployed by banks, as well as the reporting of those systems into central banks. They know exactly what's going on, and if any intervention within markets are necessary, they can do it in a timely fashion. So this really is having a positive impact on stability, not also from a global perspective. And just to summarize, basically, in that machine learning in risk, time again, that it's better than human judgment. What we see is also more complex approaches typically imply better models. This for the bank means better lending decisions, lower default rates, increased customer acquisition and retention rates. So for the bank also, it makes financial sense. And then the final aspect I wanted to touch on is the emergence of alternative data. And data, as I said, is the new oil. What I mean by alternative data is new types of data that we did not use before. And a good example here is open banking data or web data. Now, open banking data is really a new initiative in the kingdom. What it means is that when you apply for loan, there will be a mechanism where you can share your transactional data, your bank account, with potential financiers, and they can then use that to complement their traditional risk models. And this reduces the dependence on classic credit bureaus. But the big advantage here is that the more data we add to the financial ecosystem, the better the models and the more accurate the systems. And this benefits the lender in the end, because you can get a lending decision that is accurate and your affordability will be assessed, so you're not going to overextend yourself, and you don't have to go through a lengthy process to substantiate why you need the loan, or by providing some financial details that just makes the entire process drawn out and not very enjoyable. AI adoption, we've also learned, and hopefully we can learn with what we've seen in other regions and sort of jump these barriers. So the first barrier is mistrust in this broad adoption of advanced machine learning models in financial services. And we've seen this in Europe, and we've seen this in the US. Initially, when we started developing these models, people saw it as black box solutions, and there was this whole mistrust. In the last couple of years, we've really been focusing on explainability and interpretability. So stakeholder engagement, really proving to key stakeholders and to the final clients why these models make decisions, how they make decisions, to prove that this technology is basically a benefit and it's got a high return on investment. So explainability and interpretability. And these systems will always, human oversight is a critical component to any AI system, and we always need to make sure that we can explain and we can interpret the results from these systems. The second one was that with more complex solutions, it became more difficult to validate, to test, to make sure that when we build these things, we don't do something silly, we don't make coding mistakes. So validation, the deployment complexity was also cited as another barrier. And again, here the enabler was to really go and work hard on standardizing the methodology, And this accelerates validation, so internal approval and implementation of the models in your system. This is really something that's really happened over the last 5 years. And now we are basically ready to move on to full-scale advanced machine learning adoption. And that leads me to my final slide, which is a busy one. I think from a timing perspective, we are a little bit over. But basically, the transition that I see within the financial services sector is it's a positive, what I call a positive circle, in that we've got rule-based systems, and we've got the algorithmic-based approach, which is basically AI, and then we've got machine learning, which is our more explainable models, and our neural networks, which is really like sort of the OpenAI, ChatGPT type of technologies. All of this basically works in together. We're not going to get rid of rule-based systems. We still need to use the outputs of these models, but we will now use them in our rules and we'll make better decisions. So how the process basically works is that this will allow a common approach to risk assessment and pricing. Neural networks will provide some very specific inputs into these type of models. For instance, as I said, with image processing, for instance, if you want to verify somebody's ID. Or alternatively, to analyze text. Also, specifically within Saudi Arabia, where there is Arabic and English, these type of neural networks helps us to sort of standardize two very different languages. And that's obviously very important, that we're able to work with a uniform data set, and neural networks and language processing specifically works well there. And then basically what these systems also do is it creates predictive features or output. So we don't allow the systems to make decisions without us really understanding what, we make the decisions. We just use the systems to give us the right information to make the systems. And this is called data intelligence. These models will create a high level of data intelligence, and then we use that data intelligence in our expert rules. And then there's also case management. So again, when I said this, we have to have that feedback loop to identify if application is paid back, or if a loan is paid back, if application is fraudulent. So case management is very important, and data aggregation, data processing, and data retention. The more data we can put in the ecosystem, the better our models get. And this was also developed something called data storytelling. So all of this basically, in the end, tells a very compelling story. And again, that story can be used in our rule-based systems. So really what the idea here is, and to summarize, is that we expect to see a fast adoption, specifically under the 2030 vision. We expect to see a fast adoption of AI in finance. What we'll see is a transition from legacy manual to or expert rule systems to systems that incorporate AI. The adoption of AI-driven models will obviously increase over a period of time. So initially, we will not go for the most complex models, but it will be a transition period. Neural networks will be used definitely within very specific areas. As I said, language processing, image processing, advanced fraud detection systems, and also to help us with what we call advanced feature generation for this data storytelling. Key to all of this is explainability and interpretability, and that we still need systems that are understandable from a human perspective, and then data integration is the other key. What is AI? What is the benefit of AI? And this slide very quickly is that we've got so much data. AI is the only effective way to discover hidden patterns and turn that data into money. Every second that we spend on the internet, we produce 1.7 megabytes of data. In 2021, there was 21 trillion gigabytes of data globally, and this is expected to double in the next 4 years. AI is the only effective way really to make sense of this data. AI facilitates the automation in the workplace and in life. It boosts efficiencies, productivity, leading to a better quality of life. But there's a condition to this, and that AI needs to be regulated. It can disrupt society in positive and negative ways. And I believe much more than any other technology in the past. Thank you for your time. And I think now we're open for questions.
We are, Jared. Thank you very much. That was really insightful. You do look like you're disappearing on screen, so do please stay with us. Oh, you're back. Thank you, Jared. No, there was a really insightful presentation. There was a lot of heavy content there, but we will be sharing the content with you. We will be sharing the content and the presentation and the recording after this as well. It will be uploaded into the Google Sheet onto the Telegram group. So everyone can enjoy it there. Jared, do you want to just close your screen because we can see your Slack on there, and I'll just go through some of the
Okay,
questions
thank you.
which we got over here. So a lot of questions have been coming through around AI. First, just taking it a high level, we looked at a couple of use cases: credit scoring, fraud prevention. Where do you see AI pushing next in financial services? Where do you think it's going to have the biggest impact going forward?
Let me just stop sharing my screen here, and then I'll stop that video.
Yeah, should be at the top. You can.
Oh, okay, that's better.
There you
Okay.
go. Perfect.
So I think the next big thing is, well, there's a couple of next big things. I think a technology, for instance, like ChatGPT, that could definitely. I see, for instance, in chatbots and automation of call centers. So basically, how we interact with our clients, that could definitely speed up that process and make it a lot better. But I also see fraud detection and financial crimes and fighting that as those are potentially. So two things: making the customer, what I would say, making the customer journey more pleasurable. So how we interact with our bankers, our loans, how loans are processed, speeding that automation, speeding that process up. We don't have to go and look for, send past financial statements or bank accounts, etc. All of that process gets automated. So automating the interactions, making it streamless. But yeah, and then also technologies like ChatGPT, that also the way that you interact with your, in Europe where I live, a lot of these technologies are being adopted, and I can already see, for instance, interacting with my bank is becoming a lot easier. In that before I used to hate going online and talking to a chatbot, and then last week I wanted something, I wanted a second card, and then the chatbot knew exactly what I wanted to do. So the next thing is something comes into my email, and then I fill in the form. I scan in my ID, the front and the back side, and it's done. 2 days later, you get your credit card. So this is really where it speeds up things dramatically within our e-commerce. Looking at e-commerce, we expect that eventually e-commerce will be 90 to 100% of all transactions. And it will basically streamline that also. How do the e-commerce company onboard new clients? How do they quickly assess, is this a legitimate client? Is this, what is the limit that we can afford for this person? So I just say that it will make access to financial, access to capital, access to loans a lot easier and a lot more streamlined going forward.
Great, thank you. And I guess on the investment side as well, do you see AI playing a role for wealth creation from some of these companies? We've got a few questions here about using it for investments and trading.
Yeah, from trading perspective, yes, there's already a lot of AI trading systems. My focus is more on the risk side, but risk is part of investment. So we see specifically, and my focus is more what we call micro and small companies. So we try to really focus on how can we improve risk assessment to this particular group, because this is really the group that is critical to the well-being of a country long-term, because it's a primary source of employment, but this is where innovation takes place. So if we can help banks, finance companies, investors to really go into small companies a lot sooner, then definitely from an investment perspective, we are seeing that if you can quantify risks better, then obviously you can make better investment decisions.
Thank you for that, Jared. And I guess another question which we have here is you mentioned some of the training models for AI. Are there any pre-trained models which a fintech or a startup could use either for loans or for finance or for other aspects in financial services?
So one of the things at Mozen that we're working on specifically is to really partner with other fintechs out there that are looking for this capability and creating an infrastructure and an ecosystem where we can, where we can first help them to develop these models, but eventually empower them to do it themselves. So yes, definitely. And in the audience, if there's anybody that is interested in that, please reach out and contact us. We would like to get into start talking about this.
Oh, great. Thank you, Jared. And I guess another question is bringing this now to GCC, to Saudi. How is Saudi ready for generative AI? Is it ready for sort of this new developments which we've been seeing and exploding with ChatGPT and everything which has developed since?
It is actually, and I think it is, and it's almost that you have to be. And when ChatGPT broke covers, like Italy, the first thing they did is ban it, and I think that's the worst thing that you can do, because basically what you take the legitimate use of a very powerful technology off the table. But the illegitimate use, the bad actors are still going to use it. So ChatGPT definitely is something that we need to, or that type of technology needs to be incorporated into the legal systems as quickly as possible. I see it as, yes, it could be quite a harmful technology in that you could use it to profile, for social engineering, for spamming, for phishing attacks, etc., to discover systems. But we can also use it in a positive way to really increase the sophistication with our systems, but also to automate the way that we interact with clients and customers, get their feedback, understand that feedback. So one thing that ChatGPT does quite well is you can write a little story to it, and then it can sort of assess the sentiment behind it. And that will hopefully, if you can automate those processes. So for instance, from a customer management perspective, you get people complaining, and you can very quickly get the gist of the complaints, and then hopefully automate that process and get back to clients that are unhappy a lot quicker. So yes, we have to, we will adopt this technology very quickly.
Excellent, Jared. And one question, let's talk a little bit about the risks related to AI. So there's a few questions here about use of data, security around data, and we've also got some questions related to how training those models. You mentioned that the AI models can be used for actually fraud creation as well, and cybersecurity risks. So how would we go about managing that? Is it sort of AI versus AI, and whoever's got the more powerful model wins?
It is almost, yeah. It's almost like who's got access to it's a combination. It's obviously getting the right resources in place. So the industry and the country needs to foster this initiative and make sure that people go to university, they study data science, they study AI, that type of thing. So you need the right people, you need data, and then basically you need the processing power, and you need investment into this area. I'm looking at the data science industry globally. It's worth $400 billion today. It's expected to grow over the next 7 years to $2 trillion. So it's again still relatively in an infant stage. So the key here is really to invest in the sector as quickly as possible, so that the technologies can be used for good. Unfortunately, all technology that and it's a human history. Whenever we develop technologies, we can use it for good and evil, and unfortunately we always do. But our focus is purely here is use the technology for good, because it can, and I believe fully in this, and that it could really transform the way that we live. It can make life a lot better. So yeah.
Excellent. Jared, so final question, and it leads on very nicely to the final question, is we've had a lot of questions here about, if I'm a student, what can I do to learn more about this? If I'm working in financial services industry already, what can I do to get my company more engaged in using AI? So have you got any suggestions of resources or things that people who are excited by AI can do? And I think the other part of this is there's now a lot of noise around AI because it's become so popular and it's blown up, and you're seeing lots of different things. So how do you cut through that noise and get to things which are really going to help people?
I think if you're a student, then it's a bit, there are a couple of there is a couple of things or a couple of books I can recommend. If you can just give me a second, yeah.
Sure.
Yeah, we can maybe share this with the presentation, but there's a book that I particularly like. It's called Prediction Machines, and it specifically relates to on how how what I showed today, but how it works and how it can benefit society or companies, specifically within the financial sector. So I'll share some sort of references where people can reach out to that just to get a better idea of what, because there is a lot of misinformation. Unfortunately, I get really upset where there's this negative view of AI, in that it's not, I don't see it as a negative disruptor. I see it very much as a positive disruptor. But if you want to get AI within your business or see how AI can improve your business, then please reach out to the experts. There's lots of fintechs that are operating within Saudi. We operate as a obviously as competitors, but sometimes we are, it's a community, and so I'm not just going to promote Mosin here, but there's an entire sector here. Reach out to the experts. Get assessment of your data, understand which problems, get people to understand the problems that you face. The expert will be able to tell you on how to use that data to solve your problems. And that's really what AI is.
Amazing. Jared, thank you so much for this presentation. We're really pleased to have you, especially for the last session in the series this year. You've given some great guidance, great advice, and we look forward to future collaboration with yourself and with Mosin as well.
Thank you so much for the invite, and thank you for the audience as well. I hope you found it interesting, and please, we will share the presentation, obviously. But again, if there's any, Mosin is, we've got a website. Please contact us if there's anything that, any assistance that you need when it comes to AI or data.
Is that the best way to get in touch? Go through the website and go through the contact forms on the website.
Yes.
Fabulous. Thank you very much again, Jared. And nice speaking to you.
Thank you.
Thanks. So everyone, thank you. That's it. We're finished. Fintech Summer Sessions 23 is now over. Thank you so much for staying with us over the 10 weeks. We have covered everything from what's happening in Saudi to alternative finance to payments to open banking, open finance, blockchain, AI, and you stayed with us for the whole journey. So we really appreciate yourselves, your support through this. So just wanted to finish a few housekeeping things. I know we've got a lot of questions around the certificates. Just to iterate, you've got to join 8 out of the 10 sessions live in order to get a certificate. We know that people can't get to join every single session. They're traveling over the summer as well. So that's why we've allowed a couple of limits there. So if you can join at least 8, you'll be entitled to a certificate. What will happen after this is our team will be diligently going through the registrations and checking the certificates, and you will get an email. You'll get an email probably around by the 17th of September, asking for a few more details and to see how your certificate's going to be looked, what name you want on the certificate. So if you do not get an email by then, but you feel that you're entitled to a certificate, do contact us on info@fintechsaudi.com and we'll get that sorted for you. The other thing to say is that all the recordings, I know that there are a few recordings missing and a few PowerPoint presentations missing, but they will be added into the Google Sheet, into the Telegram group, so you will get those uploaded shortly. There are also still a few last remaining places on the Intro to Fintech course. So Lena's shared the link in the chat. If you do want to develop your knowledge and you can't wait till Fintech Summer Sessions 24, then do please try and join the course if you can. There is a fee for the course. Fintech Saudi does not take any of that fee. It goes all to EMFT for running that course. It's a 7-week course on introduction to Fintech. I think I've covered most things. I think, look, follow Fintech Saudi on Twitter, follow us on LinkedIn, say hi, come and say hi to us on LinkedIn. We have a lot of exciting initiatives coming up. The Fintech Tour, we've got the Fintech Careers Fair, we've got the internship programs. So we've got lots of things coming up in the next 6 to 9 months. So please do stay connected with us. We want you to continue this journey, an exploratory journey on Fintech. And last but not least, I'd like to thank our team. Kareem's been joining us. Lena's been there as well in the background. They've been doing all the heavy lifting and work on this. So really thanks to our team for supporting on this. And final thanks to yourselves for joining us here today. We couldn't make these sessions without you. So please do give us feedback. We will send you a feedback link. Let us know what you'd like us to cover in Fintech Summer Sessions 24. So other than that, Kareem, is there anything else we need to cover?
Thank you, Sagar, for moderating these amazing sessions. Thank you, everyone, for being with us. And we look forward to seeing you next year.
Looking forward to it. Enjoy the rest of the year, and we see you next summer. Take care, everyone.